The Fortress of Finance, a comprehensive guide to JPMorgan Chase & Co., JPM. As of February 19, 2026, JPMorgan Chase & Co., ticker JPM, is the undisputed titan of the global banking system. While other financial institutions have spent the last decade trying to find their footing, JPMorgan has built what CEO Jamie Dimon calls a fortress balance sheet. In early 2026, the company officially crossed the $4.4 trillion asset mark, a scale that allows it to operate with a level of efficiency and technological firepower that its competitors can only dream of. For a new investor, JPM is no longer just a bank. It is a massive data processing engine, a global payments network, and the primary vault for the world's wealth. This 1,500-word guide breaks down the company's recent earnings performance, its aggressive $105 billion spending plan for 2026, and the strategic Apple Card acquisition that is set to redefine its consumer presence this year. 1. The business model, a four-headed giant. JPMorgan's strength lies in its diversification. It is the only bank in the world that holds a number 1 or number 2 position in almost every category it enters. Consumer and Community Banking, CCB. This is the retail side, mortgages, auto loans, and checking accounts for 62 million active customers. In 2025, this segment generated $19.4 billion in revenue in the final quarter alone. It is the most stable part of the business, fueled by the 10.4 million new credit card accounts opened in just the last year. 2. Commercial and Investment Bank, CIB. This is the global Wall Street arm. It handles mergers, acquisitions, M&A, and stock offerings for the world's largest companies. In late 2025, JPM maintained its number 1 ranking for global investment banking fees, capturing 8.4% of the global market share. 3. Asset and Wealth Management, AWM. This segment manages the money of the ultra-wealthy and institutional funds. By early 2026, total client assets surpassed $7.1 trillion. This is high-margin, fee-based income that doesn't depend on interest rates, providing a cushion when the economy slows down. 4. Commercial Banking. This serves the middle market, companies with revenues between $20 million and $2 billion. It is often the overlooked engine of the bank, providing steady loan growth and payment processing fees. 2. The 2026 catalyst, the Apple Card integration. The most significant news for JPM investors in early 2026 is the Apple Card transition. After Apple ended its partnership with Goldman Sachs, JPM stepped in as the new issuer. Why this matters for your investment? Instant scale. The deal adds approximately $20 billion in card balances to Chase's books in a single stroke. The tech rebuild. JPMorgan is currently undergoing a massive 2-year tech rebuild to integrate Apple's unique, privacy-first infrastructure into the Chase system. The prime customer. Apple Card users are generally high-spending, tech-savvy consumers. Bringing them into the Chase ecosystem gives JPM an opportunity to sell them mortgages, wealth management, and high-yield savings accounts. 3. The spending to win strategy, $105 billion in 2026. One of the most striking things about JPM in 2026 is its expense guidance. The bank expects to spend $105 billion this year, a $9 billion increase from 2025. Where is the money going? Artificial intelligence. JPMorgan is spending billions on its proprietary Doc LLM AI model, which has already reduced document processing time by 35% in its commercial banking unit. In 2025 alone, AI applications delivered $1.5 billion in business value. Global expansion. While many banks are closing branches, JPM is opening them. The bank is on track to enter 15 new U.S. markets by the end of 2026, targeting affluent wealth hubs like Boston and Miami. Blockchain and tokenization. The JPM coin network now settles over $10 billion in daily transactions. By early 2026, it became the primary way for institutional clients to move collateral instantly across time zones. 4. Financial health, earnings, dividends, and buybacks. On January 13, 2026, JPMorgan reported full-year 2025 results that were, quite simply, record-breaking. Key financial benchmarks. Net income. The bank earned a staggering $57 billion in 2025, with an earnings per share, or EPS, of $20.02. Net interest income, or NII. For 2026, the bank expects NII to hit $105 billion. This is the profit the bank makes from the spread between what it pays on deposits and what it earns on loans. Capital return. JPM is a capital distribution machine. In Q4 2025, it returned $4.1 billion in dividends and $7.9 billion in stock buybacks to its shareholders. The dividend. In early 2026, the dividend was set at $1.5 per share per quarter, or $6 annually.
yielding roughly 1.95%. JPM has increased its dividend for 15 consecutive years. 5. Critical risks. What keeps Jamie Dimon up at night? Every investment has risks, and for JPM in 2026, they are primarily macro and regulatory. Sticky inflation and high rates. While JPM benefits from high rates through NII, sticky inflation could eventually hurt the consumer. If credit card defaults, currently around 3.14%, spike unexpectedly, JPM would have to set aside billions more in credit reserves. Regulatory scrutiny, the Apple Card risk. Regulators are closely watching the Apple Card transition. If the CFPB, Consumer Protection Bureau, implements new rules on credit card late fees or data privacy, it could lower the profitability of JPM's most aggressive growth segment. The NBFI shadow. Jamie Dimon has repeatedly warned about non-bank financial institutions, NBFIs, private credit and shadow banks. Because these firms aren't regulated like JPM, a crisis in the private credit market could ripple through the global system and force JPM to step in as a lender of last resort, as it did with First Republic. Valuation. JPM currently trades at a price-to-tangible book value of nearly 3.0. This is a significant premium compared to peers like Bank of America at around 1.8x. You are paying for the best-in-class management, but that means the stock has less room for error. 6. Strategy. How to invest in JPM in 2026. If you are looking at JPM today, trading at approximately $307 per share, you are looking at a core holding. The buy and hold anchor. JPM is rarely a get-rich-quick stock. It is a stock used to anchor a portfolio, providing steady dividend growth and capital appreciation. It has a 5-year total shareholder return of 130%, proving that it can outperform even the tech-heavy S&P 500 over long horizons. The AI supercycle play. JPMorgan Global Research recently forecasted that the AI supercycle will drive above-trend earnings growth of 13 to 15% for the next 2 years. JPM is uniquely positioned to benefit from this, both as an AI user and as the primary lender to the AI data center gold rush. Timing the entry. With the stock up nearly 40% over the last year, it is currently choppy. Investors often wait for a pullback towards the 280 to 290 range to start a new position. However, with the Apple Card balances hitting the books in mid-2026, many analysts believe the new floor for the stock is already being established. Conclusion. The indispensable bank. JPMorgan Chase JPM in 2026 is the ultimate compounder. It has successfully navigated every crisis of the last 2 decades, from the Great Financial Crisis to the 2023 regional bank collapses, and emerged stronger each time. By combining the scale of a traditional bank with the innovation of a technology firm and the growth of a premium income provider via Apple, JPM has built a competitive moat that is virtually unassailable. While you are paying a premium valuation for the stock today, you are buying the most resilient, best-managed piece of the global financial infrastructure. The verdict. If you want an investment that allows you to sleep at night while still participating in the upside of AI and the Apple economy, JPM is the gold standard.